situation that we're in with a big stagflation, I think it's the safest term,
Mhm.
is he who loses least wins. And what does that mean? If you compare gold to a lot of the other asset classes like real estate, bonds, or stocks, gold is basically at the same place. So it's lost less price than some of these other asset classes. It's been somewhat disappointing from the aspect that most people listen to me and others and say, look, the most negatively correlated asset to the stock market is gold. And that's true. That's a fact. But yet here's the stock market, the NASDAQ off rather substantially. The Dow's kind of hung in there. And that's the stalwart index, the Dow Jones Industrial, as we all know. So I think gold is doing its job.
As a leader in uranium discovery in Argentina, Blue Sky Uranium is focused on advancing a rapidly growing portfolio of uranium vanadium projects into low-cost production while respecting the environment, communities, and cultures in which they work.
Hey everybody, this is Rob Kientz with Stock Pulse Inside the Markets, and our first guest this week is going to be David Morgan of the Morgan Report. He has been involved in the precious metals markets for several decades and a well-known speaker, and also writes a newsletter and has a large subscriber base that's been following him for quite some time. You guys seen him on my channel and, of course, at the Stock Pulse conferences as well. David, how are you doing today?
Rob, I'm good, and thanks for inviting me on Stock Pulse. Rob and I are pretty friendly, as you know, and I just a public shout out to Rob because it takes guts to do anything meaningful in life, and especially when you involve the public. And Rob came and said, I want to do a silver symposium. What do you think? I said, well, I'm all for it as long as you do all the work. and he did, and we've had two of them. They've both been very successful, in my opinion.
Yeah, I agree with you, and it's been a lot of fun to go. Being a newsletter writer, or a YouTube guy now, I guess is what I am. You're always looking for opportunities to reach your audience in person. It's great to go to the conferences, and Silver Symposium is one of the very few that's actually here in the U.S. I know we had Hard Assets maybe a decade ago. You've got the couple up in Denver, but there aren't really a lot of precious metals related conferences down here. So it's nice just to have something to go to and speak to people.
Exactly.
So, gosh, markets 2022, David, I think has been just an interesting year. I think from my perspective, following the precious metals markets, I kind of expected maybe a little bit more of a bounce in the precious metals prices, but it seems as though this has been sort of a year of liquidation and margin calls and selling, and the whole market's just kind of had this malaise and it's selling off. Overall, the precious metals not too bad. I was looking at this, and I think silver is actually even or slightly up on the year. Gold is down just a couple of percentage points, not doing bad against the rest of the market. Does it surprise you the precious metals have held up this year when everything else seems to be burning like Bitcoin?
Well, there's several ways to look at it, Rob, but I think overall, in a situation that we're in with a big stagflation, I think it's the safest term, is he who loses least wins. And what does that mean? If you compare gold to a lot of the other asset classes like real estate, bonds, or stocks, gold is basically at the same place. So it's lost less price than some of these other asset classes. It's been somewhat disappointing from the aspect that most people listen to me and others and say, look, the most negatively correlated asset to the stock market is gold. And that's true. That's a fact. But yet here's the stock market, the NASDAQ off rather substantially. The Dow's kind of hung in there. And that's the stalwart index, the Dow Jones Industrial, as we all know. So I think gold is doing its job. I would have wished for a better performance. Silver's made what's called a round trip. Excuse me. It started at 22 something in January, made it to 26 and double topped, been down to like 18. I said 1850 was the bottom. So it got pretty close to calling the bottom this time. And now we're back up to 23. So certainly a lot of gyrations in there, but it's a year-over-year basis, basically hasn't moved.
It's done great. And the story, I think, the last year or so, especially recovering from the shutdowns and the pandemic, has been inflation. So we've had this period where we almost got to double digits. I thought in 2022 we would hit 10% in the CPI. Of course, we didn't quite get there. It's falling now. I think the latest one is somewhere in the low 7, 7.1, 7.2. So it looks like, Dave, we may actually be heading toward deflation. What's your view on that? Do you think we're going to hit a deflationary episode here in the next year or two?
Yeah, I'm very strong about this. Number one, you read The Golden Constant by Professor Jastrom. He proves that gold does best in a deflation. That's number one. Number two is I think we're already in a recession. That's a fact. I don't care what the government says or the talking heads. Lastly, I think we're going into a depression. And I, as you know, Rob, I think you've got my private work a few times, but I start off every month with a quote. And the quote I used, I think a year and a half ago was from Elliot Janeway. You can look him up. I think he died 20 years ago, but he was a maverick. He was an outside the box economist that told it how he saw it. And he said, the next Great Depression will make the last Great Depression look like a small technical correction. Now, I'm not wishing ill will on anybody, but I also have to use logic. And logic shows you quite simply that the economy is what we produce, what we trade with each other. The financial markets are bifurcated from the economy and have been that way for quite some time. So just because you have a big number on an index doesn't mean the economy's doing well. So the main contraction have been in food and what produces food, fertilizer. Mm-hmm. And that's huge because you can live without driving your automobile, might not get to work, but you've got to eat no matter what. So we've seen huge price pressure on the foodstuffs across the board. And then you couple that with what the oil sector's been doing on and off. And you've really got those two things that to hone it down into the simplest back of the napkin, elegant way to look at it. What do humans need the most? Food and energy. What's costing the most in real terms? Food and energy. So I am stating the last fact, and that is all inflations end in deflation. I mean, when the Zimbabwe hyperinflation ended, the $100 trillion bill I take out and show on the camera so often did not even circulate. The currency had been destroyed by that point, and they came out with another system, which is basically precious metals and U.S. physical notes, which were used all the way up. But that was like the only thing left until they redistributed the new Zimbabwe, notes. So I am concerned that the people that believe they should borrow as much as they possibly can and leverage all to the hilt because inflation is going to bail them out, I think is the wrong attitude. I think in this environment, even though we're going to see higher inflation, we can't depend on inflation bailing you out. I think having as little debt as possible and as little leverage as possible in this environment is the best way to approach these markets across the board.
Yeah, I agree with you. And when we had Silver Symposium here a little while ago, I designed a roundtable talking about the Fed bear trap. So the Fed's in a nasty little, a spot here because they're raising rates to curb, the effects inflation could have on the economy. They don't want it to run away. However, what they're doing really is stopping the economy from growing at this point because they're pulling away the punch bowl. And in the last 12, 13 years, we printed obscene amounts of money, distributed obscene amounts of credit. And that's really what the economy has run on. But when I look at what's happened to the actual fundamentals, they haven't really necessarily improved, especially in like labor force. And I was looking at an article today from Politico, and they were talking about the trade-off between unemployment and inflation and the Phillips curve. And the assumption of economists for so long was, well, coming out of World War II, it was low employment. We could trade a little of inflation to stabilize employment. And that was the thought. And so the target was 2% for the longest time, Fed printed and eased. But now we're having both high inflation and low labor force participation rate. And I don't care what the unemployment number is they quote on CNBC. All I look at is the total number of people employed versus total number of people in the country. And that's all I need. I don't need all these goofy adjustments by these, Ivy League economists that have never run a business. I just want to know, do people have money to buy goods and services? Are their wages keeping up? And definitely that has not recovered. So the Phillips curve looked to be like a big load of bullshit, to be honest with you, that we've, economists have been falling for 40, 50 years. So where do we go from here? We now have high unemployment. We have high inflation. What do you think comes next? What's going to break here?
Well, something will break. I'm just finished another interview, you may be aware of it, with USA Watchdog, but I'm of the belief that the Fed is boxed in and they know there's really no way out. So the way to mitigate the damage is to continue to increase interest rates. And that makes the bond market go down, which is deflationary, but it saves the currency. If they pivot, then everybody's brother-in-law's cat knows that we're going into a pseudo or eventual hyperinflationary mode where the dollar is going to be worth less, and worthless. And that won't happen exactly. So my take right now is that the Fed wants to continue this hard stance until they employ a new system. And the new system, I think, is a struggle between those that want like a global currency, i.e. what Mark Carney said at the UN, the World Economic Forum, and then Jackson to the Fed, versus what the powers that exist want. So if we went to the Mark Carney model, where we have basically nation state global currencies on central bank digital currency, and those meld into one for efficiency or whatever, versus the JP Morgans, the Wells Fargos, all the top investment banks, that cuts them out of the pattern. I mean, if you have one central bank for the world and you interface directly with it, then, Rob Kientz has got an account at the Fed coin, and that's all you have. You don't have a bank. Well, do you think these banks are just going to roll over and say, oh, yeah, me too, regardless of what Klaus Schwab has to say? So I think there's really a bit of a battle going on. And I think the people that run the Fed, which is, you can argue it's changed over the years. There are private investors that own it, but also the commercial banks have a great part in it, the money center banks. Regardless of all that, there is, I think, a battle. And I think the battle is, we're going to keep raising interest rates. What the future looks like is fascinating to me on an intellectual basis. It's like, how is this thing going to sort out? What I fear, and I want to put the fear card too hard, is human nature. What if these arrogant know-it-alls cannot move the system into the new paradigm as easily or as fast as they think that they can, and we get a collapse where nothing works? Now, that would be disheartening to everybody, because if you go to your bank and you can't get out cash, or you go to the bank and you get it out, but it doesn't buy anything. And I'm not saying and I think in extremes, Rob, you know me. I mean, my engineering background, I look at, from zero to infinity. So I look at the worst case and the best case. And 99.9% of the time, it's somewhere between those. But nonetheless, what if, they threw a digital currency party and nobody came? Now what happens?
Wasn't that what happened in China the first time they tried to roll out their digital yuan? The people said, hell no, we have Alipay and WePay, and we don't need you. And then on top of that, recently, the Minnesota Fed president at Cornell University was asked about the digital dollar and central bank digital currencies. He's part of the Fed. He leads the Minnesota Fed. And he said, well, I mean, what can it do that Venmo doesn't do? Why do I need this? We already have these type of applications to send digital money. And of course, you have the private cryptos, and whether or not you believe in those, that's a mechanism. So why are we all of a sudden doing like a digital dollar? And he went on to say, and he's president of the Minnesota Fed, and he went on to say, this is a control system. It's a system in which they can control what you spend. It does not allow any privacy whatsoever. It could be allowed to integrate with a social credit system like China has put into place, where they limit their citizens' mobility based upon how much they agree with the government. This is the Minnesota Fed president come out and saying, this is not me saying it. It's not conspiracy theory. It's not out of left field. I believe there are people within the system that are looking at this going, I'm not so sure digital currencies are the way to go here. What's your view on the central bank digital currency? Is it, is it the control system, or is it just their solution to, a dollar system that after, 90 years appears to be falling down?
I think it's both. I think it's primarily we've got to get a new system, and what does it look like? And usually bureaucrats, for the most part, are followers, not leaders. So they're going to implement something that, Satoshi Nakamoto did, or whomever really invented the Bitcoin idea with the blockchain. So that appeals to them. And plus, on top of that, they get control. And that's what the political class loves, is that they get to control us all. But I think primarily they need a new system, and they know it. They just, again, will they be able to implement it? Do they really have it in place? Will it be, will it will it work out easily? In other words, are you just going to see something where it's really no difference to what you're already doing, other than it's a cashless system or whatever? I doubt it. I think there's more roadblocks to it than most people or some of us think. In other words, what you said about the Minnesota Fed guy is very important because, as you stated, Rob, the political class in and of itself, or the banking class, is not in agreement. And that goes back to what I said a minute ago, where your JPM, your investment banks, your money center banks, no, I don't want to be out of business. I don't want one central bank that does everything directly with the population. I'm in business to do that. You're taking my business away.
Mm-hmm.
I don't want that to happen. So, and then as that all takes place, we're getting closer and closer to the edge where either the dollar blows up or the bond market crashes, or they can't put a handle on gold anymore, or one out of 1,000 black swans we can think of takes place. And now it's out of their control. And I want to make this point. Markets have a mind of their own. And as much as the Fed or central banks or the BIS, Bank of International Settlements, can control the market, they can't control it 100% of the time. And there's no better example of that than the $1 trillion bet, long-term capital management, because they had the code. They were, Nobel laureates, and they built a system that was yielding, I think it was around 20% a year over year. There wasn't enough banks that could line up and get in on it. And then they predicted, the markets extremely well until it didn't work anymore. And then the Russian bond situation got out of hand, and it was whatever 6 or 7 sigmas down the road, it still happened, because you can predict human behavior most of the time, but not all the time. And that relates back to the markets. The markets could dictate to the Fed or to the World Bank or the IMF or the BIS. And that's what I think they fear the most. And we're so over leveraged, which you make a point after point on your shows of, there's these, 2.4 quadrillion in derivatives. And they're just a mess. It's a complete mess. And most of them are based on interest rates. So as interest rates continue to go higher, it's putting more and more stress on the system. And again, what gives, and that remains to be determined. We may find out in the first quarter of 2023. I'm not forecasting that. What I'm trying to convey is that there's so much leverage in the system, even though 75 basis points is actually quite a bit. But let's just say 25% basis point. No one knows where that straw that breaks the camel's back is. But every time we increase the interest rate, it's getting closer to breaking the camel's back.
Yeah, I think it is too. And I think that's the bear trap that we're talking about. No matter what the Fed does, they're kind of screwed, honestly, because the system's long in the tooth. If they tighten too much, they've got problems. If they don't tighten, they've got problems. And either way, it's not really a good outcome for them. But I wanted to turn back to something you said earlier about the banks. And I do think the banks are they're probably in a turf battle with the central banks, honestly. And you see the banks now starting to come out with these really grim forecasts for 2023. I think Bank of America said we would have rolling waves of uncertainty leading into a deep recession. And Goldman Sachs is coming out. It almost seems as though, David, the commercial banks are saying, okay, we're gonna pull the curtain, and we're gonna show you the man behind the curtain. Maybe as leverage, or maybe they're just speaking the truth. I don't know, but I definitely don't see the commercial banks being positive going forward. They're not rosy calculations there. What does that do to the market? How should the market react? Because it's very clear that everybody knows that there is a major problem coming. Now, as to the depth of the problem, some people disagree, but we have a major problem. What do people do to combat these potential rolling waves of uncertainty and recession that are going to hit in 2023, according to Bank of America?
Yeah, the best solution is to be debt-free and live within your means. And if you can do both those things, then save. If you're going to save, I suggest you save in hard money for the most part. You certainly need currency to pay your electric bill and all that. But I do think that the metals longer term, I'm looking for a good 2023. I'm not looking for an explosion, but it could happen. But I think we've got about 2 years or so left before something's fix-up could break, on the next interest rate rates. I just don't know. But what I do know is that it can't go on a lot longer. And I know we've been saying that for a long time. But the markets, especially what you just stated, Rob, is even the banks are giving out these sort of trial balloons, if you know what they're what they're really saying. And they're saying, we're in a jam and we don't know how to get out of it. And the only way you could get out of it is on a personal level or a business level. I mean, if I was a huge real estate investor, and I'm not, but if I was, I would probably sell off a lot of my portfolio and maybe keep 30% that's all cash paid for and positive cash flow up the yin yang and a good jurisdiction with great renters. I'd probably hold on to the best of the best, but I would probably relocate into the metals if I was primarily a real estate investor. Just backtracking for a moment, this is what made Mike Maloney such a success, among a lot of things. But Mike was the only guy going to the conferences with Robert Kiyosaki and all these real estate investors that were really well off. And Mike was telling them there's cycles in markets. And the cycle is we're peaking in real estate and the metals are down. You should shift some of your assets from real estate into precious metals. And the people that heard him and listened and learned and did it couldn't have been happier. And I think we're at that point again.
That's a really good point. A couple of things I want to point out here. I've got some additional information from Jim Rickards I want to throw at you. But it's interesting you said that because I started in real estate in 2000. So I was a gold guy much later on. I was a traditional real estate investor. I did follow Kiyosaki and a lot of local real estate investment. Did that for about 18 years and I got out in 2018. And I'm still in real estate investment groups. I belong to a lot of commercial real estate investment groups here in Dallas. And they're wanting me to just jump into these apartment complexes, commercial strip centers, things like that. And I'm like, guys, this is not the time to do it. And I have friends wanting to develop, to get good land deals. I'm like, yeah, you're getting a good deal because those people selling it to you are getting out. And what you're doing is you're buying real estate near the top. And this is not the way to do it. In the Dallas area, real estate, there's huge demand from immigration and building can't keep up. But even though that's the case, cap rates are already falling. It's not a positive sign for real estate investors. And it just seems like we're headed toward a big storm in real estate. And I keep screaming at the top of my lungs to my real estate guys, move some of your portfolio out, just protect yourself. And I think when you're in this euphoria, you're making money hand over fist, and you have been for 10 years. It's really hard to get out of that mindset. And I think that's why we're, the Fed is in a bear trap, but I think people are in a bear trap. They don't understand how it's going to affect them personally. And to that point, I was watching Jim Rickards on with Greg Hunter of USA Watchdog here the last couple of days. And Jim Rickards is saying it looks like 2007. And he was basically looking at two things. He was looking at the bond yield curve. It's inverted, meaning the shorter term is requesting more yield, so more yield up front. And that typically, when that happens, it predicts a recession. But he also said, hey, look at the euro dollar futures. Because if you look at the dollar, the DXY, it's very strong. And people think the dollar is very strong. But if you look at euro dollar futures, they're not doing so hot. And what that means is the rest of the world's view on dollars, you see it first in the euro dollar market. And so that's coming under pressure. So I see he sees pressure both on the dollar, foreign dollars held outside the US, and on the bond. And that also has to do with international investment into the bonds because a lot of that market is international. So the rest of the world is not so hot on the dollar. So I almost think as though we have this view that the dollar is bulletproof and it's going to go on forever here in America. But when you step outside America, you get a completely different picture from the rest of the world. And people just aren't paying attention to this. What do you think, David? You live here. What do you think the consequences are going to be? Are there people, in your community starting to talk about this? Are your community leaders starting to talk about it? Or is it sort of all quiet on the Western front and people don't know the British are coming?
Well, two comments. One on the real estate, and you accurately said it in all markets, but the euphoria at the top, it's very hard to call tops. I've actually been lucky, successful, I'll call it luck and skill, some combination. I've called every top in the silver market so far, and I certainly hope I get the next one. Of course, in the next one, do you trade, physical hard money for a fiat currency that's collapsing? We don't know yet. But on the real estate thing, going back to the big boom, there were tracts, and a tract, I think everybody who listens to us knows what that means. But, these cookie cutter homes that are, built out by these big real estate developers. Mm-hmm. And, there could be 1,000 homes, 2,000. And in Las Vegas, they ended up just bulldozing many, many homes because they overbuilt. Supply and demand, and the supply exceeded the demand by a long shot. So most people don't know this, but they just bulldozed them down. Mm. So there's an idea about, the top of a market or a market being overextended. As far as what Rickard says, I always have time for James Rickards, no doubt. I agree. I think there's the subtleties that most people don't see. nothing goes forever. The dollar's worth 2 cents from 1913. How much longer have we got to go? My estimation, less than 2 years. What replaces it? We already talked about. And will it work? We already discussed. So I am battening down the hatches. I'm living within my means, debt free, still advocating a portion into hard assets like gold and silver. And there's always opportunities. I mean, during the Great Depression, if you can meet a need and have a business that meets that need, go for it. I mean, don't be afraid. Don't live in fear. Be bold when everyone else is in fear, but also think it through. One of the things that came out in the Depression, to my understanding, is I think it's called Jiffy Mix. It's like cornbread in these little boxes. They used to cost 12 cents. Now they probably cost $1.20. But you think, oh, we wouldn't want something that mundane. But no, people loved it because it was, filling, it was cheap, and it was less work for them. It's just this box, you throw it in, you throw it in the oven, and bang, you're done. So there's always opportunity. And so I would suggest to people that are fed up with their 9 to 5 and they want a way out, just think it through. And there's ways to start, especially now, Rob, with the internet, that you can do things that you couldn't ever do before because you can get such wide distribution for almost no money at all. And if the market likes your idea in a real free market, it will succeed.
Yeah. Last question I have for you. I saved this one for the end, and it has to do with your origin and why you got into it. The reason I ask this is because I think if you're a new precious metals investor, especially if you're in the younger generations, you're looking at people who've been in this for a while. And I get this question all the time. They'll kind of ask me, after conference sessions and things, and I get emails. Why did you get into it? How did you get into it? So if you can just explain sort of at the very beginning, how did you get into the gold and silver space? What were you doing before and what was motivating you?
Well, I was 11 years old when the 90% coinage went away, and that kind of fascinated me. I didn't obsess about it or anything. But then when I got in the 8th grade, we studied the Constitution. I thought, well, if you can only use gold and silver as means of final payment, how come we're using this stuff? And no one could give me an answer. So I just got fascinated, almost obsessed about money at an early age. So I did a self-study. And what I determined was what we all know now. You said you want to listen to this show, that, we have a fractional reserve system, and these things blow up over time. And so then I started learning about the newsletter industry. And once I found out about that, in the old days, snail mail and these, pretty bright people that were taking a different viewpoint on the economic conditions and writing about it, became fascinated by that. So I became a newsletter junkie at an early age in my 20s. And I subscribed to almost every hard money newsletter out there and learned and went to investment conferences. They were fairly popular way back when, and still are, of course. So it's just a self-taught thing. And then when I went to business school, I was already pretty much an academic on the Austrian school because the von Mises Institute had a lot of information, and all you have to do is read Murray Rothbard for 1 or 2 books, and you're, in my opinion, you're sold. It's like, wait a minute, I want to be free. The state doesn't own me. This is what the Constitution says, and here's how it really works. And so that just was what moved me. And the more I learned, the more convinced I was, and it turned into conviction. And then it turned into my way of life. And it's not been the easiest road, but I wouldn't change it because what we need, in my opinion, is power to the people. And how to get power to the people? Well, I've said many times, Rob, if money is power, and it seems to be power, and it seems to be a control mechanism, if you want the power, then you've got to have the money. And the one money that the banks really don't control that much is the silver market, because they gave up on silver as money, which means we, the people, should advocate silver because the banks don't have a large control. Yes, the bullion banks on the COMEX and at the LBMA have a significant amount that they control, but it's so leveraged. It's been hypothecated and rehypothecated so many times. When the rubber meets the road and you need it for either industry or investment demand, and it's not there because it's got 12 claims on the same pile, things are going to get interesting. And I think that day is coming sooner than most people think.
Okay. David, if people want to get in touch with you and want to get access to your writings, how do they go about doing that?
The best thing is the main landing page, themorganreport.com. But just so everyone knows, I'm giving a special to the end of the year. I started on Black Friday. If you go to silver123.net, that's silver123.net, you'll get a landing page. It talks about the premium service. I'm giving a $200 discount, and anyone that signs up will get a 15-minute one-on-one with me, not one of the team. It'll be me and you. And I've already done a few, and so far these people are pretty happy. It's just to kind of get to know you and put you in a position where you get to answer your questions. I had a guy this morning, he was concerned about, do I take a stock certificate or don't I? He had some questions about storage of metals overseas. Mm-hmm. And then he had a question about what's the best, safest metal to own if you're a U.S. citizen, confiscation, that kind of thing. So it's my pleasure really to help my members. And I think it's something that very few have offered. And I thought of it recently and said, well, I put in long days, but you know what? I'm willing to do this because I think the time is ripe for people that are, as you said earlier, they've got this money and they're really not sure where to go or what to do. And, there isn't a perfect answer, but if I was starting right now with no cash and just building an investment portfolio, I'd focus on the metals. And if I had a big real estate or bond or stock or all three position, I would definitely be looking for the Mike Maloney solution and moving out of those asset classes. And then,
yeah, I agree with you. And that's why I've, over the years, the more I've studied the economy, more I've studied economics. I've moved a lot of my portfolio into the metals as well. I moved out of some real estate and some other things. But I sleep better at night. I mean, I just don't worry about, the valuation. And recently we had a medical issue come up in the family and sold metals to pay for that because you know how expensive medicine is getting. And really, if anything, it's that gold that I sold to pay that medical bill. If I hadn't bought it 10 years ago, it would have cost us a lot more because the metal I bought was certainly a lot cheaper. And that's the power of gold over time. It really does hold its value. And it's perfect. It was there when we needed it and we used it. So I definitely can speak to, buying the metals, using the metals in a situation where you need liquidity and they're there for you. And that's better than leaving money in the bank account, letting it deflate and then not getting any interest on it. I'd rather use the metals. That's why I store my money in the metals. So I agree with you there. And wanted to thank you for coming on. I know that you also join us at Silver Symposium at the conferences. So if you guys are interested in meeting David Morgan in person next time we have a conference, I'm sure, you'll be there, David. I know you live in the area and they can reach out to you at that point as well.
Yeah. Well, thank you, Rob. Appreciate it.
All right. Thanks for being on, Dave. And stay tuned. We've got more episodes of Inside the Market coming up. We've got a couple more interviews this week, and we'll continue to bring that content to you. Thank you for sticking with Stock Pulse and also for Silver Symposium, which we'll have again in 2023.